It's Thursday, the 17th of November 2021. Welcome to the Fear and Greed Business Headlines, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
All right, 5 stories in 5 minutes. Let's get into it. Story number 1, a big one. The Commonwealth Bank yesterday said it made $2.2 billion in profit during the September quarter, but its share price fell more than 8%. Now, this is the country's largest company, so it's a big story. What's going on?
Well, investors weren't impressed with the result. Notwithstanding, it was 20% higher than a year earlier, but it was 9% below the average of the March and June quarters. Essentially, the profit margins of the country's largest bank are being squeezed, and investors dumped the stock. It was the worst day for Commonwealth Bank since the height of the pandemic, and the bank lost about $15 billion worth of value yesterday. Now, bear with me for a moment. A bank's margin relies heavily on the difference between the interest rate it pays on deposits and what it receives on loans. Fierce competition means that gap is narrowing and it's hitting the bank's bottom line. Commonwealth Bank boss Matt Commons said other parts of the business were performing really well, but investors don't like seeing profit margins being squeezed, hence an 8% drop.
All right, big story. On to story number 2 this morning, and we're talking about wages growth. Wages obviously not just important because we're talking about the money you take home from your job, but they're also critical to the trajectory of interest rates. So wages growth coming in fairly benign is a pretty significant story.
Yeah, it sure is, Michael. They were up 0.6% during the September quarter from 0.4% in the June quarter. That's according to the Australian Bureau of Statistics. The annual rate rose to 2.2%. Now, the Reserve Bank has made it really clear the main reason the central bank doesn't think it'll need to lift the official cash rate until 2024 is because there's not much wages growth. The Reserve Bank wants to see sustainable growth in wages at about 3 or 4% before it does anything on interest rates. Clearly, the Bureau of Statistics numbers yesterday backed the Reserve Bank's view that wages aren't an issue. There wasn't a lot of heat in the market during the September quarter. Of course, that was during lockdown, so maybe the result's stronger than it looks. But overall, it adds to the argument that interest rates won't rise in the next couple of years.
Okay, story number 3 today. The management of Afterpay made their final pitches to shareholders yesterday in favour of the $39 billion bid from US payments giant Square. How did it go?
Well, it was certainly heartfelt, and shareholders will decide on December 6th when they get to cast a vote on the deal. Chair Alana Rubin and co-CEOs Anthony Eisen and Nick Molnar told the group's AGM yesterday that the deal will make Afterpay more influential on the global stage. No doubt about that. Undoubtedly, the deal is about growing in North America and data. US consumer spending using Buy Now, Pay Later is up 230% since the start of last year. In the fashion category, it now accounts for about 6.5% of all US e-commerce spending. Afterpay's referral business, it sends about 1 million referrals to global merchants every day, is a key reason why Square bought the business. And yesterday, Afterpay said it had created $8.2 billion in new revenue for retailers via the referral system. It's also launched in-app advertising. All these things, of course, diversify its revenue streams.
Yeah, absolutely. On to story number 4 today, and pretty much all of us have money in super funds, and so there's a bit of good news with most super funds looking like they'll provide pretty decent returns for 2021.
Yes, that's right. The most recent data out from Chant West shows that the median growth fund, which has 60 to 80% of funds in higher risk assets such as equities, has delivered a return of a touch over 11% so far this year. It puts growth funds in good shape to end the year strongly. Now, over the last 29 years, the median growth fund has delivered average annual returns of 8.2%. So it looks like 2021 will be a good year. Balanced funds, which generally have a lower allocation to equities and are considered safer, have delivered returns of 8.4% so far this year. That too is much better than the long-term average.
And finally, story number 5 this morning, a quick one about the phenomenal growth of some of the electric vehicle makers in the US.
Yes, Rivian, the electric vehicle maker backed by Amazon and Ford, listed on Wall Street a week ago. Its share price has doubled in 5 days of trading. It's now bigger than Volkswagen. Then another EV company, Lucid, its share price has been surging. It's now worth more than Ford. Absolutely incredible, the growth of these electric vehicle companies, obviously led by Tesla, but the others as well.
Yeah, amazing. That's it. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 17th of November, 2021. Remember to hit follow on the podcast, and you can always find more info at fearandgreed.com.au and sign up for our free daily newsletter. I'm Michael Thompson, and that was the Fear and Greed Business Headlines. Have a great day.